Hey, good afternoon and happy Thursday to you. Thank you for joining us for another installment of From Dream to Reality, our first time home buyer and homeowner series. And we're in our second installment of Destination Home Ownership, First Things First, where we're helping you determine your path to home ownership. I have an awesome episode for you today. I have some amazing guests that's going to join me here in just a moment and talk about some of the things that they do. And we're going to go through a quick review of last week, really, really quick. And we're going to get in some new information as well. And so if you want to follow me, definitely go to IG, go to LinkedIn or YouTube and type in From Dream to Reality Live. On Facebook, I'm at My Senior Mortgage Advisor. My Senior Mortgage Advisor. Or you can just type in at My Senior Mortgage Advisor in Google. And so I'm going to share my screen really, really quickly there. And so, yes, I'm so excited to talk to you today and have a power pack show for you on today. Listen up, quick announcements coming up. So, had some overwhelming responses to the question I asked last week. I'm thinking about starting two new live streams. One is where we take a deep dive in every aspect of the home buying process and we break it all down to you, get into the weeds, take our time. We're going to bring professionals from the home inspection industry, from the home insurance industry, title industry, real estate, construction, renovation. We're bringing all those professionals in to you to talk to you about what they do to help you. It's called Tuesday Real Talk or Real Talk Tuesday. Wednesday is Hump Day Meetup. You're going to have an opportunity to chat in. I'm working on getting the 800 line into so you can call in and get your questions answered live. And so stay tuned for that. It's going to be coming up probably starting in third quarter. And so today, From Dream to Reality, Destination Home Ownership, First Things First, where we help you determine your path to home ownership. And so here's our mission. Why are we doing this? Why are we taking the time out of our day when we could be doing other things to bring you this information, to provide information that provokes thought and conversation about what it takes to achieve and successfully maintain home ownership, thereby empowering home buyers to take action consistent with turning their home buying dream into a successful home ownership reality. That's our why. Who am I? Who is Sean Wilson? Why should you listen to me? First of all, I'm a 15-year industry veteran, actually coming up on 15 years in September. I've been doing this for a very long time, very knowledgeable in this space. But that aside, who am I, the person? So as you see on the screen, I'm from Baltimore, born and raised in the DMV area. I'm a homeschooling father. I'm married for 24 years, coming up on our 24th wedding anniversary next year. And I love performance tuning cars, man. That's like one of my things outside of my family. I get out there and get under the hood or tap into the computer of the car and just kind of make it do what I like it to do. And I'm a percussionist as well. I play percussion for my church. And so there's the set that I minister on at church. Someone snapped that picture and sent it to me while I was actually practicing for that day's service. And that's my wonderful family. So if you look at my personal Facebook page, Sean Wilson, you'll see that family picture there. It's been there for a couple of years now, but that's an awesome picture. And it kind of expressed each one of their personalities. You know what I mean? The expression that you see really is who they are as people, right? And so this today, we're in our second installment, as I said before. It lasts from April, May, and June. So if you want to get caught up, just hit me up on Facebook and go to April 21st, and you'll be able to see our first installment. Today is the 19th, is our second installment, and June 16th, Thursday at 2 o'clock, is going to be our third installment. And collectively, that information is going to help you determine your path to home ownership. And so we changed our agenda a little bit today. We're going to talk about minimum standards for FHA, VA, USDA, and conventional. We put off our non-QM and our renovation loans. We're going to talk about that next week, along with down payment assistance and the closing process and that kind of thing. but we are going to go through some of the waiting periods. If you had some type of life event, things happen, things come up. And so there is home ownership after a life event, and we're going to talk about that. We're going to talk about protecting your pre-approval. Once you get that pre-approval letter or that conditional approval, we're going to talk about what do you need to do to protect that. And so, quick intro to New American Funding. Who are we? This is our mission statement, but very important. What I want to point out is that we enable clients of all backgrounds and empower them to achieve the American dream. Our dedication extends to the servicing side because we service all non-down payment assistance or closing cost assistance programs. That those programs that are not in the loans that we originate, we service those loans as well, and we're privately owned, and the founders are still leading us today. You see some of the accolades at the bottom, and we're big on education. We have a website called Smart Start Home Buyer. The link is right there. You want to go there if you're a first-time home buyer, have some more information to help you out and guide you in that process. So, who is on your home buying team? So last week we had some dynamic guests last week, right? But we're going to talk about it in a second.
The Home Buying Process Part 1. Meet your home purchase team. Buying a home is very exciting, but it can be a difficult process. Luckily, there are professionals ready to help you along the way. We call them the key players of the home buying process: the loan officer, the real estate agent, the insurance agent, the title and escrow officers, the home inspector, the appraiser, and the movers. The first important key player is the loan officer. The loan officer you work with will be responsible to help you attain the best possible rate and terms on your mortgage. They will help you get pre-qualified with an upfront credit approval, which will determine how much you can borrow to buy a home. Before you make any final decisions, your loan officer will explain all loan options. In addition, your loan officer will collect any necessary documentation from you to fund your loan. You've taken the first step by getting pre-qualified. Now it's time to find the right home. The real estate agent. One of the most important key players in the home buying process is the real estate agent. The real estate agent's job is to listen to your needs and help you find exactly what you are looking for in a home. They will pull a list of comparable sales in the area to help you decide on your offering price. In addition, the agent will arrange home inspections, help you understand important paperwork, and stay up to date on pertinent timelines. You've locked in an offer on the perfect home, but more choices lie ahead. The insurance agent. Before any lender will fund your loan, they will need to see proof of your homeowner's insurance policy. The insurance agent will help you find the best fit for your needs. The insurance agent will help you obtain homeowner's insurance and provide the proof that you need. Your home is now insured. Now, time to finalize the paperwork. The title and escrow officers. Both title and escrow officers aid in the completion of your home purchase. Their task is to make sure that there are no discrepancies that will get in the way of the sale. The escrow officer will ensure completion of all requirements from each party before any money transfers hands. Almost time to move in. A couple more people will help you make sure you chose the perfect home. The home inspector. It's highly advised that you have the home inspected by a professional, but it's not mandatory. This person will inspect the home for damages or issues and evaluate what needs to be fixed. The outcome of the inspection will determine whether you move forward with the transaction or stop and reevaluate the terms of the sale. Now you can be sure you got a great deal. One more final check to see how your home compares to its neighbors. The appraiser. The appraiser is responsible for estimating the market value of the home. Your loan officer will schedule an appraiser to determine market value of the home you are buying. There are certain criteria that they use to estimate the value, such as measuring it against similar homes in the area. Once the offer is accepted and your loan is funded, with keys in hand, it's finally time to move in. Help with the move is on the way. The movers. There are varying degrees to which movers can be involved. It can be as minimal as loading your packed things into a truck and unloading it at the new place, or as extensive as packing everything up for you. After the paperwork is done and you have the keys to your new home in hand, the movers will come to your rescue. Monitor what they're doing and make yourself available to answer any questions they might have. Jump into your home purchase prepared.
Awesome, outstanding. So moving on to the next. So last week we had two of those members that of your team was on our show last week. We had a real estate agent and we had a title company. Kathy Austin of eXp Realty and Lauren Logan of Cardinal Title. You want to go back to April the 21st on my Facebook page at My Senior Mortgage Advisor and Google, and you'll be able to hear what they had to say. And there's their phone number. If you want to reach out to them, they're dynamic. I encourage you to give them a call and ask your questions related to their areas of expertise. And so today we have two more dynamic members of your home buying team today. We have Mr. Al Durant, President and Principal Inspector of Uptown Inspection LLC. And we have Silver Glover, agency owner at Goosehead Insurance Agency. So we're going to bring both of them up right now and have them talk to us today. Hey, what's going on, guys? How you doing? Can you hear me?
Doing well, thank you. Thank you.
Awesome. So thank you so much, guys, for being on our From Dream to Reality series today, Destination Homeownership, first things first. And so I'm excited to have you guys on. You guys are dynamic in what you do. And we've had conversations offline talking about what you do. I'm gonna put your contact up there first, Mr. Al Durant. So you want to reach out to him. Very, very professional. As you'll begin to hear, that's his contact information. And actually, that's also his website. If you take the info @ sign off, you can click that. That's also his website as well. And then next we have Silver Glover. That's her contact information where you can reach out to her for more information about home owners insurance and that kind of thing. And so first up, I want to take a moment to talk with you, Al, really quickly. About your home inspection process, because you come up first in that process right prior to we engaging the services of Silver Glover. You come up first, and I'm gonna show this on the screen. And so we were talking earlier about your points of advice that you would want to share with home buyers, and I see you put an awesome list up here. So walk us through some of this information, and I'm gonna take us off the screen for a moment so everyone can kind of see this information.
Yeah, so thanks, Sean, for inviting me on the show today. Yeah, these are just a couple of the flyers that I have that kind of list some of the things that you should know kind of about a home inspection. But the first one you see on the slide here is it's buying a house, 5 reasons to have a home inspection. Okay, so number one is to uncover safety issues. So one of the things that any person that's planning to live in a particular place wants to make sure that the house is going to be safe. So number one, a home inspector will uncover safety issues. Number two is to uncover structural issues. So not all homes have basements. Not all homes have crawl spaces that are accessible. So number two is, we're actually using our trained eye to uncover structural issues that might be presented at that particular property. So, a lot of times I'm sorry, were you saying something, Sean?
Yeah, I was going to ask you really quick.
Sure.
Structural issues. How can a layperson, out with the agent, kind of pick something up? Who's only may have lived in an apartment complex or something like that, and don't have that kind of a visual experience. What are some of the kind of signs that they can make a mental note of? Like, wait a minute, something's going on here. with as regards to structural issues?
Sure, sure. One of the things that I tell most of my clients is whenever you're approaching a property to buy, whether it's to be your primary residence or an investment, always approach the property as if you're looking at an investment property, because
Okay.
this is something that most people are going to be spending the most amount of money they've ever spent in their life on.
Okay.
So look at it as an investment property. So that means you're taking off those foggy lenses that basically say, this house is beautiful. I love the floors, all of that, and really going into an investor's mindset. So it's really just walking around the house, making sure that everything that kind of should be there is
Mhm.
there. If it doesn't look right, chances are it's not right.
Awesome.
So it's really clear a lot of times when I begin walking my clients around the homes, and I say, hey, let me point out this structural issue I found on the foundation, and they look at it and they say, wow, I would have never thought to look at that particular spot, but you're using the wrong lens. So if we kind of switch that lens from the home buyer, this is my primary residence lens, to being an investor, and this is a property that will eventually pay me dividends in the future, then I feel like those things become more obvious.
Awesome. Quick question for you. So if I'm walking around exterior of a house, right? I'm
Mhm.
walking around with my real estate agent and I see like a zigzag, really, really hair thin crack going from like where the I guess the shingle, not the shingles, but the siding down to the ground. Does that necessarily mean that we got a cracked foundation, or could that be just surface issue, a surface
Well,
issue?
it all depends. But if you're saying it's starting from where the exterior siding is or exterior cladding all the way down to the foundation, that's definitely something that you want to have taken a look at by a professional. More
Gotcha.
than likely, there's a structural issue with that house. So
Gotcha.
typically, what you see is, vertical cracks are common. You can find vertical cracks in a foundation of a home that was built, last year, a year ago.
Okay. Okay.
Um, but you never want to see horizontal cracks, and then also you want to be careful of step cracks, and that's more what you're referring to, where it
Okay.
almost looks like a staircase. And
Oh.
I would just advise that you either have a structural contractor take a look at that, or
Mhm.
have a home inspector walk through that property just to make sure that there's no issues there that you need to kind of bring to the negotiation table or to back away from.
Outstanding, outstanding. So I'm inside, I'm in the basement, right?
Mhm.
And I'm looking around because I always educate my clients to take a flashlight with you and or make sure your phone is fully charged so you can use the phone's light and wear some sneakers or boots or whatever. Go in the basement and look at the where the wall meets the floor,
Mhm.
especially if there's no carpet, and look for discoloration and things like that. What if I'm in a basement that's not finished? What should tip me off to ask more questions or give me a pause if I'm looking in the basement, and I don't smell anything necessarily, but I'm looking at issues on the wall potentially, on the concrete floor potentially. How
Sure,
would I?
sure. So, unfinished basements are great because they will kind of tell you what the house is doing. So,
Okay.
any moisture stains that you see either on the foundation walls or on the floor is a good indication that something is happening to the home. Any cracks that you see on the inside. So, a lot of times when you see those cracks on the outside, maybe it's a small thin hairline crack on the outside of the foundation. Most times those cracks don't carry through to the inside. But if you do see them on the inside, it's more of an issue that needs to be addressed. But yeah, taking a flashlight is also good for basically seeing if there's any moisture, specifically when it comes to finished drywall, not necessarily in the basement, but also on the upper floors. Just shining that flashlight around the ceiling and around the walls A lot of times you can point out a lot of the imperfections in the paint that will
Hmm.
lead you to believe that something has been covered up,
Oh,
or you can point out moisture stains a lot easier that's not visible to the naked eye.
nice, nice, awesome, awesome. So potential forecasting potential issues and expenses. Is that-
Yeah, so forecasting potential issues and expenses. So as a part of a home inspection, we're going to be telling you not only what are the current issues, but also what will be an issue in the future. At least a good home inspector will. So for that means for houses that might be kind of approaching the 30-year mark and it has not gotten its windows replaced, or if the house is maybe 10 years old or so, or 10 or 15 years old,
Mhm.
and it's in need of a new water heater, or down the line you might be looking at a HVAC system that might be towards the end of its useful life. A good home inspector will let you know that, hey, you might want to budget for a replacement
Mhm.
of the HVAC system within the next 5 years, because you're going to need to replace it, or budget for a replacement of the windows.
Outstanding, outstanding. All right, and so how does this help us negotiate, especially in this market, man? It's kind of tough, I guess, with home buyers out there and shortage of properties. But how does this help you? How do you see that helping me, Mr. Homebuyer, Miss Homebuyer, negotiate and leverage?
Well, it's information, so negotiations, whether it's as is or not as is, a lot of homes are being listed as is in this market just due to it being a seller's market. But if you come back and you say, well, the roof is falling in, it needs a new furnace, the water heater is 20 years old and useful life is only 15, and this house is it's not a safe place to be at this particular time, you might see that a lot of these sellers are going to provide some concession, and I've seen that time and time again, where sellers may have listed the house as being as is, but then come back after they see the report and say, hey, I knew kind of about that, but I didn't know it was that big of a deal. Let me go ahead and at least throw some money at it, or let me go ahead and try to fix it, so that if I do lose this buyer, I don't have the same issue present itself with the next one.
Wow, awesome, man, amazing. So, what made you get into home inspection as a
Yeah,
career?
yeah. So kind of as a child, I grew up in New York, and I always dreamed of owning a big, beautiful house. Growing up in apartments, it's just you cramp for space. So I found myself watching. This might be dating myself. The public access channels, the real estate listings for hours on end,
Right?
looking at the houses that I dreamed of one day buying. So I knew from early on that I wanted to be in real estate. I just didn't know where exactly I would fit in, when, or even how I was going to get there. Kind of fast forward 20 years later, as a project and program manager in both the construction and facilities arenas, I knew it was kind of time to branch out. So it was at the time where I first flipped my first house,
Okay.
and I saw that the inspector had literally spent about an hour and was charging the buyer about 375. I was just like, I might be in the wrong business. So I want to say from that point on, I think I studied and passed my national examination and was an inspector probably about 5 months after that date.
Outstanding, outstanding. And so I understand that you chose to open your own business instead of going to work for another company. What made you decide to do that?
Well, I think entrepreneurship is built into my DNA. I'm some people might say I'm a serial entrepreneur, but Uptown is not the first business I started.
Okay.
Definitely won't be the last business I have. But I feel as if not everyone has the tools in their toolbox to kind of branch out and do their own thing. But when you do, I feel like you're doing yourself a disservice when you Don't, use the gifts and talents that God has given you. So that's why I branched out and did my own thing.
Outstanding. And so
Mhm.
you also extended your your inspection to new construction.
Mhm.
So I'm thinking, I'm being on this side, I'm on the financing side. So I'm thinking, and I don't know if there are home buyers out there that might be thinking the same thing. I'm thinking I'm getting a new build construction, and they had the county coming out and inspecting it. Why should I hire a home inspector to go over that? And obviously, you've seen reasons why to do that. So let's talk about that for a second.
Yeah, so kind of number one, code inspections is the minimum standard. So if you know anything about the minimum, you know that it's barely meeting it. What most people don't understand is that every system or every component in your home has a manufacturer standard. So we're not necessarily talking about the code inspectors of your local municipality
Gotcha.
meeting the manufacturer standards. They're meeting the minimum standard. So
Gotcha.
that means if
Barely getting in.
go ahead.
Just barely getting in.
Yeah, just barely getting in and
Okay.
barely holding together. So you want to make sure things are done most times to the manufacturer standard.
Outstanding, outstanding. And so in your tenure in the business, have you come across issues that were missed during your inspection that
All the
that
time.
have saved the client?
Yeah, all the time. I inspect new construction homes regularly, and it's also a good idea to have them come in kind of pre-drywall, so you're getting a sense of what's happening behind the drywall, behind the scenes.
Awesome.
So you're seeing the plumbing, you're seeing the framing, everything naked, basically in the home, just to make sure it's done right. But I've seen it all. I've seen it all, and even in my personal home, I just we built my home now. I think in 2019. So brand new home. And I want to say on my particular report, because I actually did the inspection for my own home, I think I probably had about 19 or 20 things that were something that I had to bring to the attention of the builder. So and that's a lot. So just take that in consideration. Problems can be corrected before you move in.
Yes.
A lot of times you have the builders, project managers, they're actually relying on the inspectors to come in and point out these things because, what a lot of people don't understand is that, during the building process, they might have 100 different contractors,
Mhm.
people working in that particular home.
Okay.
So, there's a lot of I's and T's that, that those project managers have to dot and have to cross. So any additional help they can get is most times is welcome.
Outstanding, outstanding. Thank you for that. I appreciate it. So what do you say, what would you say are the things that have made you successful? And first of all, how long have you been doing it?
Coming up on about 5 years now. I've been doing this, but I think what makes me successful is I treat and inspect each home as if I'm going to move my family into it. So I think if most inspectors had the same mindset, I feel as if there would be better inspections and happier buyers out there in the long run. But I treat every inspection as if I'm going to move my own wife and 3 kids into. So sometimes I'm overly thorough to my own detriment. But yeah, from the 600 square foot condo to the 8,000 square foot, mini mansion, they're all going to be inspected the same way.
Gotcha.
Mhm.
Gotcha. Outstanding. So what do you what do you kind of first of all, what areas or what communities, how have you served or are you serving in your community, and what are your primary markets?
So my primary market is DC and Maryland. So I'm licensed in Maryland and DC, as I stated. Well, I don't know if I stated this on this call, but DC, you're not required to have a license to
Mhm.
be an inspector. So also watch out for that as well.
Okay.
But But yeah, primarily serve DC and Maryland.
Okay, and so say a little more about that, because there are a lot of properties that have issues in DC.
Sure,
Uh,
sure.
there's a lot of build out going right now to kind of convert some of those into better performing properties. So, but say some more about that. What should a home buyer be asking an investor, excuse me, a home inspector in Washington D.C. who is not licensed and not required to be licensed? Is more importantly, what should that conversation look like? What are some key questions that they need to ask before they hire that person?
Well, I think the main thing is that if the contractor is not licensed, the home inspector is not licensed, he more than likely will not have insurance. So the main thing you want to focus on is whether or not they're insured and bonded. And I think we're going to get into some of the insurance later. Not specifically on the home inspector side, but insurance is important because should anything go wrong after you move in, the home inspector is actually liable
Mhm.
to a certain extent, and you can go back and claim losses in the event that he or she was negligent. So I think it's very important to find out whether or not he is licensed.
Mhm.
Also, to look for whether or not he has insurance, whether it's just E&O, general liability, or if he has a bond. All those things are really good to know in advance, and then also getting references. I think a lot of realtors are good sources for that information. They
Mhm.
know they know exactly who's good and who's thorough and who can get the job done. So definitely lean on them. But if all else fails, you can use the internet. Google
Yeah.
will tell the truth most of the time.
Right.
Through its reviews. So
Exactly.
read the reviews and make an educated decision.
So is there a registration list at least that people can look at? Is there a website that you recommend? I was gonna type it in real quick and just so people can.
Yeah, so if you're looking to buy a home in Maryland, you can actually go on the state of Maryland's, I think it's DNR's website, and actually pull up a list of licensed inspectors. And I can't remember the exactly where it's located, but if you type in home inspector into the search in on the on the Maryland State website, it'll take you to where you need to be. Also, you can look up the National Home Inspectors Examination. They have, and I think that might be National Home Inspectors Examination.com. But you can actually look up who has passed the National Home Inspectors Examination, which is good information as well. And a lot of times they'll have a list of people in certain areas that you might be able to call on.
Outstanding, outstanding. And what about for DC?
DC, I would just recommend you get somebody that's licensed from either Maryland or DC. That's my recommendation for that. Is I don't recommend that you use anybody that's not licensed, that doesn't have a licensing requirement. Definitely pull from Virginia or pull from Maryland to service your home inspection needs in DC.
So I pulled up this website here really quickly. So if everyone can take a screenshot of that. The URL, I'll just copy it really quickly and I'll put it on the screen so that you can make sure that you're hiring someone that is reputable, that has a license. And so this is the website address that you go to and just take a screenshot of that, and then you can type that into your browser, and it'll take you to this website here. And these are the list of approved home inspectors in the state of Maryland. And then there's also a phone number on the website that you can reach out and do some extra due diligence to protect yourself. 'Cause this is an important investment that you're making, and you want to make sure that you have professionals coming in and providing the service to the quality that they should be. Outstanding, Mr. Al. I appreciate that wisdom that you're sharing there. Real quick, last question here, and I know you got to go get back to your work today. last question we got. Well, you're actually next to the last question. Why is home buyer education important?
Well, I think homebuyer education is important because, you know, I think education in general is crucial, but in the home buying process is important because it helps you get into the right home. But also, I think it extends beyond just the purchasing of the property. It extends to, the upkeep and the maintenance as well. I think that's a portion um, that's neglected a lot of times because I see the full brunt end of that in my job where somebody's had this beautiful home and they just failed to maintain it. So it's really important from the beginning all the way through the disposition of that property. So but yeah, it gives you the opportunity to learn how to do things in the right manner so that you can get exactly what you're looking for and what your pockets can afford.
Outstanding, outstanding. So lastly, this is probably the hardest question, sir, and you may have to think about this one for a second. And so tell us give us a fun fact about yourself.
Fun fact.
Fun fact, something that you don't mind the audience to know. Who is Al Durant? And tell us something fun.
Something funny. That is a hard question. It just doesn't seem like I have fun anymore.
I understand, sir.
But I'm a family man. Really, really tied to the hip with my family. Both my immediate family, my mom and dad, my sister. We kind of all live close to each other within 20 minutes. One of the things that most people don't know when they look at me is that by my size and my color, I grew up skiing. So I'm a skier. So that's a fun fact. Actually, when I was a Boy Scout, when I was, I want to say 11 or 12 years old, I was actually in the inaugural group within Boy Scouts of America as the Black Diamond Club. So we started this Black Diamond Club of, all Black Diamond skiers, and yeah. And I'm not sure if it's still within the Boy Scouts of America, but it's crazy because you look at all these, little black kids from Harlem, from this troop in Harlem, New York, and we were skiing with the best of them. So
Outstanding.
yeah, so that's a fun fact about me.
Well, I thank you so much, sir, for taking time to speak with us today and share your wisdom and your insight and about what you do in the home inspection process. I got your contact information on the screen, Mr. Homebuyer, Mrs. Homebuyer. You want to take a screenshot of that information, write that down, and get in touch with Al Durant. You're talking to the top guy at the company, and he is available to answer your questions. Talk about that screenshot I have up there. What is that all about?
Yeah, so it's just, this is something specific for kind of dream to reality viewers, people that are linking into this, locking into this platform. If you mention dream to reality, when you call us to schedule your home inspection, we'll give you 50% off of your inspection. So if you know about, home inspections and just the whole home buying process, you're going to be putting out a lot of money. $50 will go a long way. So hopefully that will be of assistance to folks moving forward.
Outstanding, outstanding. So everyone, definitely, you want to reach out to Al and utilize his services. The other thing I did want to mention, really quickly is, let's see if we can do this real quick. Let's see how okay, there we go. Other thing I did want to mention is that we have something that's called a Home Buyer Readiness Pack. Right now, it's up to about 20 awesome tools that we're going to be giving away for everyone who registers. You want to take the time to register, and I'll put a QR code up on the screen really quickly. So you want to provide your information to us so we know who you are and where we need to send that home buyer readiness pack. In that pack, last week, we had special guest Kathy offered a free home warranty for anyone who through this medium utilizes her services. Discount title services from Lauren Logan of Cardinal Title. And then we have a discount from Al Durant and Uptown Inspections. And I'm going to bring up the QR code for you really, really quickly. I want you to go ahead and do that right now. All right. So here we go. Coming up on your screen. There it is. Hold on. Wrong image. Bear with me 1 second, ladies and gentlemen. There we go. All right, here we go. There it is. That's screenshot right there. You want to take a picture of that screen. Let me just make it bigger so it doesn't interfere. Go ahead and take a screenshot of that. That QR code is live, and then it's going to take you to a web page that you can then register and put your information in so that we can send you the Home Buyer Readiness Pack. You don't want to buy a house without this package. It's going to help you with your budgeting. It's going to help you with your finances. It's going to help you get discounts on key services. And I'm going to bring you to the screen. This is the screen that it's going to take you to. Let me bring that over. I'm just going to kind of do it right there. There it is. So when you hit that QR code and you hit enter, it's going to take you to this webpage. It's going to reference the day, right? And you just fill out this information, and that's how we know who to send the pack to. You need to have that coupon when you call Uptown Inspections. You need to have that coupon available, and you can only get it after you register there and give us your information. We will email the Home Buyer Readiness Pack to you, including that coupon and all the other goodies that are going to be in it. And then at that point, you will be able to reach out to him and get that discount that he offers. So outstanding, sir. Thank you so much. Any closing thoughts while we move on to the next segment?
No closing thoughts for me, but if I do have to say one thing, I would say that not all opportunities are good opportunities. So definitely do your due diligence and make sure that you're, hiring a good home inspector to conduct your home inspection, because at the end of the day, home inspections pay for themselves. So
Absolutely. Outstanding, sir. So thank you so much. I'm going to give you back the rest of your day. We're going to talk to the wonderful Miss Silver Glover next. And you enjoy your day, sir. Have a fantastic rest of your week.
All right. Thank you. Thank you for having me.
Outstanding. So thank you, everyone. Just clap it up for him. All right. Definitely. He's been awesome. Awesome. Silver, how are you?
Good. How are you? Thanks for having me today.
Absolutely. Absolutely. Thank you so much for waiting and going through this process with us. So who is Silver Glover? Give us an insight. Who are you?
I am just me. I'm an insurance agent or agency owner, and I've actually been in the insurance industry for maybe like 17 years, even though I'm still in my 20s.
Wow.
No. But yeah, I'm an agency owner. I've been in insurance for a really long time, and not just, I do homeowners insurance and auto insurance, but I've been in the industry in different aspects of that industry for a really long time. So
Outstanding. And so we were also talking about tips, because I always like to give tips, and I call them my top 10. Maybe I'll come up with a better name than top 10, something more, I don't know, appealing. So we're going to talk about yours today. There's several things that we were going over in preparing for this, but let me bring this up really, really quickly. Walk us through these items. What are we looking at here, and why are these things important?
So when you are purchasing a home, you have all these different processes that you have to go through. And when you finally get to the insurance side, you're like, okay, well, I need insurance. But there are questions in the insurance application for home that we like to ask you. It's important because this is how some of the insurance companies base their pricing on on your new purchase. And it's also a need to know for you as the customer, right? So, when I say the top items you need to know when purchasing a home, one, the very first thing is, has there been any damage to the home, any prior claims? Now, I know the real estate agents, I guess there's some type of disclosure. If something happened in the home, sometimes the sellers will, let you know if anything happened, but sometimes they don't. But there are avenues and ways that insurance companies can find out. Because if there was a claim made, especially within the past 3 years, with an insurance company, it's in a system somewhere. So we're able to pull it.
Wow, that's funny. I apologize to cut you off. That's funny that you say that. I had a transaction recently where the customer was going to their own provider and trying to get coverage. Everything went well, and I don't know the name of the report, but it was some report that was pulled
Mm-hmm.
that showed a $75,000 claim
Yes.
on the property in the past that wasn't disclosed in the contract.
It happens.
And then when she got the inspection back, the inspector found, saw the areas where it was repaired, but it wasn't repaired to the point where it didn't treat for any, what do you call it? Termites. So
Mhm.
although that area was repaired, it wasn't treated, and it was infested with termites in that repaired area of the house. And so she was able to get out of that contract and move on to something better.
Mm-hmm. That
So
report is called a clue report.
clue.
And yeah,
Okay.
it's called a clue report. And when I tell you anything made to an insurance company, home or auto, everyone in the insurance industry, we will know. So, and there have been times where I've had customers, they're so excited about a home, and I run this report, and like you said, there's $50,000, and it'll say water claim or water damage. So,
So let me ask you this. So you have the claim. Let's say that the customer wanted to continue
mhm.
with it. What would be the next step? You advise them of this claim that was done previously. Do you require anything from them or from the process to help them move forward with that property if they really want it?
Well, the thing with that is if it was paid and
Mhm.
closed, and the inspector inspected the home and there was nothing additional that needed to be done, then typically no. There are some insurance carriers. I work with Goosehead. It's a brokerage, and we have so many different carriers. There are requirements where there may be an insurance company that's like, hey, there were way too many water claims within the past 3 years. We need proof that this stuff was fixed and fixed appropriately. When
Gotcha.
it comes to insurance agents, if the claim didn't belong to the person who's doing the quote, we can advise them. But sometimes if I tell you, hey, there was a $70,000 water damage claim just a few months ago, that's going to freak you out. And
Right.
then you're going to call your realtor. But sometimes you need to know.
Mhm.
But on our end, we don't necessarily need anything to move forward because it was not your claim. It's the people who own the property.
Outstanding. And so, how does age? I see a lot of homes pre 1978. There was one property years last year, I think it was. The property was, I think it was 1929 or something. It was built in 1929, and so some of the original stuff in the basement was there, but it was for the most part it was in pretty good shape. So, any of the age of the home, any of those things that you see there would preclude you from being able to provide coverage.
No, it wouldn't preclude us from giving you coverage, but it can impact the rate. So if
Uh,
we're dealing with a home that was built in 1911 and everything is original, we're talking when we have to rebuild your home, we have to do vintage materials. We're not using the typical standard construction materials today. It can impact the rate. So the cost to rebuild that home will be higher. Does that make sense?
it
Like
does.
you'll have some brick homes that past a certain year, everything was brick veneer, but before then, it was solid brick. That's more expensive, but it's safer
Gotcha.
sometimes when it comes to fire prevention. But yeah, that impacts the rate.
Outstanding. So walk us through some of those other items there. If you
So
have
we have the age of the roof. This is really, really important. And this is when we appreciate inspectors and appraisers as well. Because sometimes when we ask a customer, hey, do you know the age of the roof? They're like, no. Unless it's in the description, Zillow or the realtor is like, yeah, this is a brand new roof. It was put on 5 years ago or 2 years ago. A lot of people don't know. So you have to ask your realtor to ask the seller's realtor, or if they don't know, we need to talk to an inspector or appraiser to see if they can give us an idea. Because the older the roof, the more expensive it could make your insurance for your home. Because at some point, that roof will not be good anymore and you're going to have to replace it. Or the likelihood of you making a claim on that roof is greater than a brand new roof.
Gotcha. Outstanding.
And also the type of roof. I know in DC and Baltimore, there are a lot of flat roofs. Some insurance companies do not like flat roofs. They kind of like the pitch situation, the gable roofs. And of course, you can imagine, for example, if it snows and we have about 5 feet of snow and that's sitting on a flat roof, that weight of that snow on the roof is not ideal to an insurance company.
Gotcha.
Updates to electrical or plumbing, that's always a good thing. 6 and 7 are really important. Most of the time when you're buying in the city, you're not close to the coast at all. If you're in Ocean City, that's a different story. But we're talking about flood insurance having to come into play if you're kind of close to a body of water. But your distance to a fire department is really important. You have homes that are out there in rural areas where you're more than 10 miles away from a fire department. That will definitely impact who insures your home and how much they insure it for. Because you have to think about how long it's going to take that fire truck to get to you.
Gotcha. Makes sense.
Yeah.
The longer they take to get to you, the more damage to the house is going to be.
Right. They can't recover it. I don't know how long it takes for a home to engulf in flames, but imagine a fire truck driving 10 miles. I don't know how long that's going to take to get to you in a rural area.
I got you. Let me ask you a question. So is there an ideal distance that you could say, okay, for home buyers out there who want to be strategic about their cost and save money, and this is one of the areas that I'm perceiving that you can save money when you're looking for a house. Is there like a mileage breaking point to those increased costs?
Ideal is within 5 miles.
Gotcha.
That's ideal. Anywhere you are, even in the city. There are some parts of the city where they're pushing like 7 miles in some areas in PG County where we're going beyond 8 miles. So, ideal is 5 miles. 5 miles.
Sweet spot is 5 miles. Gotcha. From the nearest fire department. Outstanding. Pools and fence.
Yes, pools. Look, they're beautiful. You got to maintain those things. But if you're going to get a home with a pool, is it in ground? Are the sellers leaving an above ground pool? Most of the time it's in ground, but is it fenced in? Does it have a slide? Does it have a diving board? Most insurance companies, they're fine with a pool if it's fenced, but if it has a diving board or a slide, some carriers are out of the equation because you got to think about the risks, the hazards of having those things. It's fun, just like a trampoline. I tell my friends, I have a couple of friends who, they're first time home buyers and they're like, oh, we're going to get a trampoline. They're fun, but let a windstorm come through here if it's not grounded correctly.
Gotcha.
So
is there a standard? That's a good point. So you have a movable trampoline in your backyard. And I've never had a trampoline in my backyard, but I would imagine they can be secured to the ground, right? Is there a standard that that homeowners can, I don't know, maybe on your website or maybe on a provider's website that says, okay, this is a standard when you're getting a trampoline, because they're fun, you know what I mean? And I know a lot of kids that would want to play on the trampoline.
Yeah, I wouldn't say, I would say precautionary measures if you're going to have a trampoline. So if you have a trampoline, make sure it's in the ground where it's not easily, like you can't just easily pick it up and move it. And have it in a yard that's fenced and locked. So a neighbor can't just walk on over to your home and start bouncing up and down on your trampoline, because guess what? If they get hurt, whose homeowner's policy is they're coming after? Yours.
Right. Exactly.
Definitely want to have it in the ground, not able to move. We had a windstorm maybe like 2 months ago. The wind will pick that up and toss it into your neighbor's yard.
Gotcha.
Okay.
Wow. You don't want to have that, right?
Exactly.
Outstanding. Let me ask you a question. What drew you to the home insurance industry as a career? What made you want to do that?
It was by accident. When I graduated college, I graduated with a degree in marketing and graphic design, and it was a major insurance company that was always on TV. And I was like, oh, I want to be in their marketing department, but I know that I had to get in the insurance side. And then ever since I went into that side, I never left. So
this is pretty cool.
Yeah, it interests me. I learned a lot. It's been so long, so I might as well stay.
I got you. What drew you to Goosehead?
So Goosehead is a brokerage that we have so many carrier options. So when you're dealing with other carriers like State Farm, Geico, they're good companies, but their agents are loyal to them and you can only use them. Whereas Goosehead, I have over 30 carriers. So every customer has different needs. So if I can't put you with one company, I can put you with another. So you just don't fit in this particular box. So Goosehead allowed me to gain so many customers because I have so many options to put people.
You can kind of customize the service.
You're right? Exactly.
So now you have the ability to, I don't know if this even allowed, like to group coverages together to make it more comprehensive for a customer.
Absolutely.
On just one carrier, you can pick and choose and put something together that will provide the best benefit for a consumer.
Yeah, absolutely. There are carriers that are awesome with the home and auto bundle. Then there are some carriers that don't do auto, but they do home, or vice versa. They only do auto, but they don't do home. But guess what? Because you have both with my agency, they still will give you a discount. So I'm able to package you all. And on top of that, I'm not loyal. So if a company like Nationwide or Progressive decides to go up on their rates, guess what? I'm going to move you to another carrier. Just as easy as that.
Gotcha. So you're able to do that post-purchase as well?
Absolutely.
Like monitoring that you do with your customers. Okay, so you put them with XYZ carrier. Is there like an alert system that says, hey, wait a minute, their rate just went up like 5%, and here's another carrier over here. You're able to kind of reach out to the customer and say, hey, listen, here's another option for you. This is what's just happening with this carrier. You may benefit by considering this.
Yeah, typically after closing, or if you're purchasing an auto policy, the insurance companies that I deal with, because I write policies correctly, they don't go up during the policy term. If there's a renewal after a year or 6 months, they may increase their rates. So of course that triggers the customer, right? If their auto went up $50 or their home goes up $200, then they're calling me. And at that point, I'm like, okay, no worries. I'll find you another company. Just as easy.
Outstanding. Well, what would you say is the key things that made you successful?
Well, I kind of piggyback off of what Al said. I write my insurance policies like you were family. I'm not here to write I guess we call it janky coverage, or just put you in anything, give you the lowest price so I can sell and make commission. That's not what I do. I'm going to give you a package that I feel like if you were my grandma or my aunt or my mother, that you should have. Now, when you say, well, I don't want this because it's this, I'm going to explain to you and educate you on the reasons why you should have XYZ. None of my customers have minimum coverage. 100% of my customers in all the states that I write policies in do not have minimum coverage.
Why is that? What's the issue with minimum coverage?
So when you're driving around in your vehicle, the minimum coverage for the state of Maryland, for example, for property damage is $15,000. So, Sean, if you have $15,000 and you hit me, my BMW, and a Mercedes because you were on your phone texting, and now we have $30,000 worth of damage. Does that $15,000 satisfy both vehicles? No. They could potentially come after you and your asset. And if you just purchased a home, guess what? That's one of your greatest assets. They can come after your home. So you need to have higher coverages.
Well, I'm a good driver. You don't want to use me as an example.
Sorry about that. Knock on wood.
Nah, that's all good. How are you serving, or have you served your community? What's going on where you are?
So I do Maryland. That's my primary market, DC. And then I have Virginia, and then Pennsylvania, because that's, I'm originally from Philadelphia. So my thing is, even if I don't sell every person that come across my line, I am in the business of educating. I'll even have customers say, hey, I have a quote from this company. Can you just take a look at it to see if I'm adequately covered or if they are killing me in the rates? And I'll tell them, hey, if this rate is better than my rate, go with them. Mm-hmm. If not, then I'll tell them all day, no, we need to get something better for you. So
outstanding. So talk to us about any of these breeds.
So, all right. So the state of Maryland.
I can't have a dog in my house.
Listen, and these are great. I'm a dog person. I love dogs, and I love all these dogs. I actually want a Siberian Husky, but aggressive breeds or these type of breeds that are classified as aggressive, these insurance companies, a lot of them will not insure you, or if they do, they have what's called a liability exclusion. So if you have a pit bull and it just so happens to bite your neighbor, guess what? That your homeowner's policy is going to have to pay up. So as much as we love some of these, and I love German Shepherds, but try to avoid it if you can. But if you wind up getting a dog, you might want to tell your insurance company that you have one of these breeds if they don't already know.
Gotcha. So what if they find out? There's a lot of dog lovers out there, man.
So if the insurance company, and they have a way, if an insurance company find out that you have these dogs, they can cancel your policy, and that's that. And what people don't understand, especially if you're purchasing a new policy, these insurance companies will come out and do their own inspections. They'll send drones on top of your house. They'll walk around your house. Any company, it's not a particular carrier. And if they see a Siberian Husky running around in your living room after you said no, they could report that to their boss and say, hey, they have a breed is not listed here. Let's send them a cancellation notice.
So I have one of these breeds, right? And I try to get homeowners insurance, and we have that conversation. Now, is there an extra policy that goes along with that, or just increase? Is it a rider, or is it just increase the policy price?
No, so there are some options. There are some insurance companies that just won't do it, but there are some insurance companies will say, okay, we'll just exclude liability. There's a liability exclusion for these breeds. So if you have this dog, it's perfectly fine. But just know if this dog bites someone, we will not insure you. And it doesn't particularly impact the rate as much. But then there are some insurance companies who don't care. So, and that's the benefit of Goosehead, because we have so many carriers that we can just pop over and say, okay, if you have this breed, I know exactly who to write you with. So
outstanding. So Mr. Homebuyer, Mrs. Homebuyer, you dog lover, you definitely have the conversation with Silver Glover about your pet to make sure you have the adequate coverage. And you never know what people might do. You walk around, they may bait your dog to engage, and so you want to be covered. It's a prudent move. You want to be covered. You want to make sure your pet's covered, and that you can enjoy the pet relationship that you have without having any concerns of liability. So great wisdom there. Why you think home buyer education, why is that important? What do you think?
You just need to know what you're getting into. When you're purchasing a home, it's a great asset that you have. It's an investment. It's something you're spending your time in. It's just important to know from start to finish, whether it's, finding a loan officer, what type of loan, your realtor, the inspection process, what are we looking for in the home? Because at the end of the day, once you close, you don't want to be in a situation where you're like, I shoulda, coulda, woulda. So you just have to, educate yourself. I do my best to educate customers, but I stay in my lane when it comes to insurance. So
Outstanding. And what are you seeing in your market? Where the markets that you serve, what are you seeing? You kind of seeing increase in coverage, premiums because of certain properties, any market conditions that affecting you? It may not be. I don't know. I just asking the question that's affected by
mm,
other industries.
well, of course, the cost of labor and materials has increased. So reconstruction costs, uh, and that is your coverage A on your home policy, what it takes to rebuild your home in an event of a total loss, have increased. So your older policies where you're at 250,000 to rebuild, probably now at 315,000. So you definitely, if you have an older policy and every year is renewed, but that coverage A hasn't increased slightly, you may want to reevaluate that because you don't want to be underinsured during this time. So that's the difference that I'm seeing.
Awesome. So you say, what was that term you used? Coverage.
Coverage A, which is your dwelling coverage.
Mhm.
So reconstruction costs.
Question for you. So I got a 300. My purchase price is 300,000.
Mm-hmm.
And so how do I know, or how do you kind of gauge? Do you give the policy to cover the 300,000, or if that's the purchase price, or is it a lower amount and then there's a rider? Explain how that works.
So when you have a purchase price of $300,000, that's nice. The insurance companies, we don't. That's market value. So that's land. That's where you're at. That's what your home is compared to other homes in the area. With the insurance companies, we're only concerned on how much it costs to rebuild that home on top of that land. So if it's a $300,000 house that you're purchasing, but it literally, when I ask questions and put in all the specific details of your home into a calculator, if it says it's only $275,000 to rebuild, then that's how much it's going to cost to rebuild. Now, sometimes it will be more if you're buying a $300,000 house and it comes back at $400,000. The same thing. We're not really concerned about the land, and we're not really concerned about the market, the area. We're just concerned that if your house burned down, the materials and the labor and how we getting it to you, what's going to cost in the debris removal to rebuild that home.
Outstanding. So what's that percentage that I see on the quotes? There's a dwelling replacement amount.
Yeah, there's a dwelling. So for me, this is what I do.
On there, we're like, what is that?
Yeah, there's an extended. Well, it's different things with different companies, but you can say extended dwelling costs.
Okay.
Whereas if I say your home is $300,000 to rebuild, but I'm going to give you 50% more in extended dwelling coverage in that package, that means that if my company is rebuilding your home and they max out at 300,000, you have an additional 50% of coverage that will cover that. So that's what that means.
Outstanding. Thank you so for clearing that up for our audience. All right, so as we wind up here, thank you so much for taking your time out and sharing your wisdom with our audience today. It's been eye-opening and enlightening for sure. So tell us, who is Glover, and give us a fun Silver Glover, and give us a fun fact about you. Come on now.
Fun fact, I've been to over 31 countries.
What?
That's a fun fact, yes.
Hey.
I love to travel. I have like a travel group, and we just pick the most outrageous places to go, like Finland, Iceland, just places you just would never think people will go. So
Iceland, you've been to Iceland?
I've been to Iceland, I've been to Finland, I've been to Sweden, I've been to a couple of countries in Europe, South Africa, Morocco. I've just, yeah.
Nice. What's the strangest place that you've been to? It's like, wait a minute, I'm never coming back here.
Wait, strangers? Okay, so I know I've been to India, I'll never go back. But Finland, I'll probably never go back. We actually went during the coldest time of the year, and It was too cold. There are not a lot of it's just really cold, and it's just far away. It's just
Really cold and far away, and not fun to hang out. Everything freezes as soon as you
it's
go
just
outside. And
everything is different. Um, just everything is different, and of course, being a person of color, they're not used to seeing. But it was definitely fun. It's definitely an experience, but it was really cold. It was colder than Iceland. It was so cold, my phone cut off. That's how cold it was.
wow,
Yeah.
wow, outstanding. That's definitely a fun fact. So tell us a little bit about this as we close out.
Yeah. So when you are a customer of Goosehead, we offer what's called a utility concierge service, where if you are moving, you know that you have to get these things done, like your utilities, electricity, cable, you got to switch all that over. So we offer a free service where we do all the shopping for you, even home security systems, a home phone. I don't even know if people still do that. We do that for you. at, at no cost. But of course, if you decide to get a home security system or cable, then that's when you decide that you purchase that yourself. But we kind of take that one chore away from you while you're doing so many other things. And so that comes with our service. So if you're interested, give me a call. We can help you. Even if you're not moving, if you're currently in your home and you want to switch up, we can also offer you the same thing.
Outstanding. So I don't have to. I'm buying a house. I don't have to worry. I just call Miss Silver. Can you handle all of these things? These 8 things that's on your flyer for me, and let me know when they're done. And I appreciate it.
Absolutely. I'll have my contact reach out to you, and I'll say, well, first, do you have a home phone now? Because I'm always curious.
Mhm.
Um, but yeah, that's all we do. We do all the shopping for you, give you the best price, and then you let us know if you want to do it.
Outstanding, outstanding. So you heard it today, folks. You heard it exclusively here on From Dream to Reality Live that Goosehead has an amazing utility concierge service where all of the moving parts in your home buying process, from finding the house, selecting your step back, select your lender, select your real estate agent, your home inspector, and getting the appraisal done and going through the process. And then, okay, now we got to switch over everything to the new house. How does that happen? So that's an awesome service that you can consider utilizing. And it's free. It's a part of the service that you offer
Mhm.
to customers, right?
Absolutely.
Outstanding, outstanding. Okay, so before we get out of here today, any closing thoughts, anything that you want to share with the audience today that we haven't talked about already, or you want to reiterate?
I would say always do your shopping when it comes to homeowners insurance. Never just go by price. I always run into situations where a customer is like, hey, I got a quote from X company and it was $900. But what does that quote look like? I don't know. I didn't get a copy. Okay, well, then you probably have a $7,000 deductible. So just make sure you do at least shop 2 companies, 3 companies, or if you're dealing with a broker like me, I can shop multiple companies. So just make sure you are educating yourself about the coverages. And also, one thing we didn't talk about is water backup. If you have a basement in Maryland, or even if you don't, that's an optional coverage that people are not getting, and those pipes will back into your home if there's an issue. So you want to make sure you have that coverage.
Water backup coverage, is that for just sewer or just regular water lines? How does that work?
That your plumbing. So
Mhm.
if water backs into your home through your plumbing, if your toilet explodes, you want to make sure you're covered. If you don't have that on your policy, you will not be covered for it. And it's not flood. So flood insurance is water seeping into your home from the outside. This is water backing up into from your pipes. You want to make sure you have. Most companies start at 5,000, and you can go all the way up to the coverage limit, but have something because water is unforgiving.
Awesome. So it includes if my pipes burst in the wintertime?
Well, that depends. There's a clause on that. It depends, because if you have freezing pipes, and there is a stipulation in all these policy contracts about maintaining your temperature in your home. You make sure that if that home, one, shouldn't be vacant. If it's a vacant home, that's another issue, because that's a reason why a lot of pipes burst. But we also know that if power outages and the weather has gone down, so it all is circumstantial, and some things can be covered and some may not.
Gotcha.
Yeah.
Outstanding. Let's clap it up. All right, Silver. So thank you so much for taking time to talk with us today,
Okay.
and I appreciate you. There's her contact information, everyone. You want to go ahead and jot that down, take a screenshot of that, and reach out to her for all your coverage needs. In addition to that, what you also can do is if you go ahead and scan that QR code, fill out the information on the registration form, and you'll get a home buyer readiness kit that we're putting together for you. It will have all of Silver Glover's contact information in there. It will also have information about this utility concierge service and a lot more. So go ahead and do that. That's the best way to get it, because we're going to give you all of the items that are in the package at one time. So outstanding. So with that, I'll say have a fantastic day and a super weekend, Silver.
All right. Thank you for having me. Take care.
Absolutely, you too. Amazing, absolutely amazing. Um, Guests on today. We're going to continue on this process. Thank you so much for your patience as we get through this today. And so next up, what do we have? What do we have next up here? We're going to You are allowed and should select the service provider of your choice and do your due diligence. Um, Al Durant was so eloquent in his expression of cautioning us about due diligence. Okay, so after reviewing we're going to review the 4 C's of lending. After you have selected your team, we want to go through this process really quick. We're going to review this. We talked about this in detail back on the 21st of April, as well as our Home Buyer Readiness I Have No Idea series in January, February, and March. So you can go back to the third Thursdays of those months and get a deeper dive in it. So capacity, what we're talking about, your ability to take on a new mortgage. Do you have the ability to do that financially? And can you do it and make sure that um, all of the other financial obligations are covered? And so one of the ways that we measure that is through the debt to income ratio. It's a calculation that shows us how much your estimated mortgage payment and added to your payments that show up on your credit report, divided into your gross monthly income or your combined gross monthly income if you have a co-buyer that's going to own the application. That gives us a number that tells us you have the capacity to receive. Now, here's what I want you to do, though. I want you to apply that formula to your net take home money, because that's going to give you the true capacity that you have to take on a new mortgage with ease, right? So I'm going to give it to you again. The estimated mortgage payment plus the debt payments that show up on your credit report, not the balance, but the actual monthly payments for that for that credit card, for that student loan, for that car payment, that personal loan. You add all those together. Then you divide that total into your net monthly income and into your gross monthly income. The gross monthly income is the industry standard. Your net is your standard. When it comes to capital, when we're talking about capital, we're talking about all sources of savings and income that you have. The income that you have to service your monthly payment, monthly debts, to your employment, your savings, your retirement account, your IRA account, gift funds. Can you get gift funds from family members? Down payment assistance programs. All of that make up your capital picture. And do we have enough capital coming into that picture that you will have what we call cash reserves left over? That's very important. You want to have reserves left over. You don't want to go into a home buying situation or home ownership situation and you have zero left over after you close. I want to encourage you not to do that, because that could set you up for some future problems. So we want to encourage you to always have at least 3 to 6 months reserved. I know everybody can't do that. It might require you to make a decision to pull back and delay your purchase and save some money so that you can have that. So if something should happen 2, 3, 4, 5, 6 months into your ownership experience, then you're not taking, you're not offset, or you're not traumatic in your response, right? So that's what we want to encourage you to do that. We took a deeper dive in previous sessions. We want to breeze right through this. Credit. When we're talking about credit, what is your condition? What's your credit score? What is your credit history? Typically, we're looking at the last 24 months, even though we'll look at the entire history that's reported on your credit report, Tri-Merge, Experian, TransUnion, Equifax. We're looking at all of that, but we want to see the last 24 months. In the industry, we're saying that last 24 months is kind of a indication of what the next 24 months and beyond is going to be for your bill paying or debt paying experience. And so we want to take a look at the last 24 months. What is your credit score? Are you at 850? You at 300? Where are you in between? Depending on where your credit score is, will determine a lot of times the cost of that loan. Your interest rate is going to be higher. Whether you pay discount points or not, that's going to become a factor as well. There may be a requirement for you to put more money down. For example, between 500 and 579, we require 25% down, right? To be able, and that can't be gifted from a third party. You have to save that money, but you can get a mortgage. I'm saying let's improve your credit and get it above 600. So that opens up a whole other world of loan opportunities for you the higher your credit score is. Next up, we're talking about collateral. Is that collateral sufficient to secure the loan that you're trying to seek? That $300,000 purchase minus the down payment, the loan that's going to be attached to that collateral, is it sufficient? Is it eligible for the financing that you're trying to get? For example, you can't get a single wide home that it still has a chassis attached to it. That's considered a motor vehicle, even though you live in it. And if you have that chassis attached to it, that property may not be sufficient collateral for the loan that you're trying to get. All right. So those are some of the things that we're talking about. And some programs, they prohibit other type of collateral, like condos. Condos go through an approval process with HUD and FHA. And if they get that approval, they need to maintain it. So there's a lot of condos here in the Maryland, DC, and Virginia area who has lost their approval. And so at that point, they're not qualified to secure an FHA loan. So that's another, you want to be mindful of that. And having that conversation, I can coach you and guide you through that process as well. All right. What loan program is right for you? So we're going to get into some of these. Now, each of these loan programs, they have a vast, the guidelines are more than what we have time to cover today. So I'm just going to go through some of the highlights, the minimum standards of each of these, and we're going to talk a little bit about the life events, and then I'll give you back the rest of your day. So thank you so much for your time and hanging out with us. So we're going to talk about conventional, FHA, VA, USDA, renovation loans, and jumbo loans, and self-employed. We're going to talk about next month, June 16th. That is our final series, Destination Homeownership, First Things First. We're going to talk about those three programs then, along with down payment assistance programs. So let's hear that.
Choosing the right home loan. Your new American Funding Loan Officer will be your go-to person for help when examining your different home loan options. Ask yourself the following questions. How long do I plan to stay in my home? Is my goal to build equity in my home? How much have I saved for a down payment? If you plan on staying in your home 7 years or less, then an adjustable rate mortgage, or ARM, also known as flexible or variable rate loan, may be a viable option for you. ARMs are often an extremely low introductory interest rate that lasts for a fixed amount of time, commonly 3, 5, or 7 years, and then the interest rate adjusts to market rates. If your plan is to settle down and stay in your home for 10 years or more, a 10-year ARM or 15 or 30-year fixed-rate mortgage may be worthy options. With fixed-rate mortgages, you can rest assured that regardless of the financial market, you'll be paying your agreed-upon interest rate and mortgage payment. What would be a good option to build equity in your home? To build equity in your home, some good choices would be a 10, 15, or 20-year fixed-rate mortgage. You'd pick this type of mortgage because it allows you to build the equity in your home faster than other mortgage products available. Every month as you make your payments, you increase your equity. As you owe a little less, you own a little more. When you build equity, you are increasing the net value of your asset, equity, and are increasing your net worth. How much have you saved towards a down payment? Some loan programs require a higher down payment in exchange oftentimes for a lower interest rate. There are also some programs that specifically help those that don't have a large sum to put towards a down payment. This is very common for first-time home buyers. Tip: don't forget to lock in your rate. A mortgage rate lock protects you from the market rate fluctuations while you wait for your loan to be approved, processed, and funded. Also called a mortgage lock-in or rate commitment, secures or locks in a certain interest rate and points for a specified amount of time. Therefore, as you shop rates among the different lenders, don't rely on the interest rate in terms the lender quotes, unless the lender is willing to offer a lock-in. A mortgage rate lock is the only guarantee that you will receive these terms at the time your loan is approved. Also, in conjunction with submitting the loan application, your loan officer will likely order an appraisal of the property. An appraisal determines the market value of a home. The lender will require an appraisal prior to officially approving any loan. Therefore, the lender will be very proactive about ordering the appraisal early on in the loan process. In fact, you will usually pay for the appraisal up front when applying for a loan. If the appraisal of the property comes in lower than the sale price, the lender will probably deny the loan. There are certain measures that may be taken in order to acquire the loan. The seller agrees to reduce the price. The buyer is able to make a reasonable down payment. Repairs can be made to increase the value of the home. These actions will increase your chances of getting approved for the loan.
Amazing, outstanding. Let's clap it up for that. Awesome. So one thing I did want to point out that was mentioned in the video, equity. It's really important. You want to definitely build equity, and we're going to answer the question, what can I do with my home equity in the fourth quarter of 2022 during our series, Cash Cow or Money Down the Drain? We're going to bring in tax professionals. We're going to bring in financial planners and financial advisors who's going to come in and just kind of help us answer that question. What can I do with my home equity? What is my tax liability if I'm using my equity to build wealth? If I'm leveraging the opportunity to build wealth instead of using the equity to buy things, you can use the equity to invest and then take that investment and return and then buy those things. So those professionals we're going to bring in, we're going to talk about that. And so stay tuned for that. That's coming up during our homeowner series. So Mr. Homeowner, Mrs. Homeowner, I have you covered starting in the third quarter. Okay, so you want to stay tuned and chime in as well. So let's get into some of this right now. So we're talking about a conventional loan. The debt to income ratio range or spectrum for the conventional loan is 36 to 50. Meaning that you take that calculation that we talked about before, your estimated mortgage payment plus your debt payments that show up on your credit report divided into your net income for you. For us, gross monthly income, it gives us the debt to income ratio. The minimum down payment is 3%. Fixed and ARM rates, they talked about that also in that video. Loan terms are 10 years up to 30 years. And for the purposes of this section, we're just talking about the conforming loan limit, which the maximum loan is $647,200. High balance goes from starts at high balance or jumbo starts at 970. multiple buyers up to 5 can be on the same conventional loan application. So I'm just going to kind of bring all of these in here. And capital. So we're looking at, and this is kind of a standard through all of the programs. We're looking at a 2-year history of employment, 2 complete full years of history of employment. If you have a second job, that requires 2 years as well. However, on a conventional loan, you can um, you can utilize 12 months under certain conditions. And we could talk about that offline. Give me a call and I'll share that with you. Other sources of income is retirement income, social security, disability, annuity incomes that you get from retirement accounts that now pay you since you're retired. And this one that most people don't know, Section 8 vouchers. So if you are a Section 8 recipient and you could use that voucher to purchase a home, we look at it as income. You just need to go through the process within the agency that issued that voucher to you to convert it over to a voucher that can be used in a purchase transaction. Need more information? Give me a call. I'll put my information up later on so that you can reach out to me and we can talk about that. And then you see their retirement accounts, minimum down payment 3% all the way up to 20%. There are manually underwritten loans can be done, but you have to have 6 months of reserves that you have saved, right? No minimum borrower contribution. That's big. That means that you can use a down payment assistance program and you can get a gift from family to cover the entire cost of the purchase. And then, of course, you can get up to 3% seller assistance down there at the bottom there. And it shows the LTV requirement as that can stair step up to 6% and to 9% under those conditions. Minimum credit score for manually underwriting that we talked about before is 680, and that's the middle score. So here's the answer to the $1 million question: do we average the scores together, or we use the lowest or the top? It's literally the credit score that falls in the middle of the three between TransUnion, Equifax, and Experian. And your middle score that you pull in your private account may be different than our middle score. You may have a TransUnion that might be your middle score. Our middle score, when we pull a credit, might be Experian or Equifax, just depending on the scoring model that's used at the time that we pull that. Now, here's something really important. Open 30-day account, monthly payments not required to be included in the debt to income ratio if you, Mr. Homebuyer or Miss Homebuyer, have sufficient funds to pay the outstanding debt off. Here's what that means. If you have a $5,000 credit card that doesn't have, and that's an open 30-day account, because that's an account that you can pay off in 30 days, right? Installment debt usually is for a specific period of time. So it does not include installment loans like a car loan or student loans or personal loans. It's talking about credit card debt. You have a $5,000 balance, but you have $5,000 over and above all of the expenses that are required for you to purchase the home, right? Number one. And if there are any reserve requirements that's connected to that purchase, you have $5,000 over above all of that. We don't have to include the payment if it doesn't have a payment already. All right. So hopefully that'll help you out there. Student loans. This is a big question mark out here. And I'm going to cover that now because there are other slides. What I'm about to say is going to cover VA, USDA, and conventional. So maybe not USDA. It's a little different. But there is a minimum multiplier that is required on all student loans, right? And there are some exceptions, and they are the following. So for conventional loans, there's a type of conventional loan, Fannie Mae. They require either us to use 1% of the outstanding balance of all the loans on your credit report, or use 5% of the outstanding balance of all, and that's for Freddie Mac, 5% of the outstanding balance showing on your credit report. Or if you're on an income-driven repayment plan and you're going for a Fannie Mae conventional loan, whatever that income-driven repayment or income-based repayment plan is, and you're getting a conventional loan a Fannie Mae guideline conventional loan, then we can use that payment even if the payment is zero. Now, if you have a student loan that has a payment already on the credit report, then we can use that as well. Okay. So hopefully that's helpful. And you see some of the collateral requirements there. One thing I wanted to mention to point out is that condo. That condo is a biggie there. If it's not already FHA approved, and we can determine that, we can look on the FHA website that we're provided, and we can determine whether it's not FHA approved. In order for you to buy that condo with a conventional loan, you're going to have to put down 10%, and you won't be able to get down payment assistance unless that down payment assistance is a grant that don't have to be repaid, and there's no second mortgage attached to that. Why is that the case? Is because there's a requirement that requires both the LTV, loan to value, and the CLTV, combined loan to value, meaning the regular loan to value, which is your purchase price minus the down payment, equals the loan to value, right? And the combined loan to value is the same, but if you get a down payment program that is a second loan, whether it has a payment to it or not, it creates a combined loan to value. Example, you have a $100,000 purchase. You subtract $3,000 for your down payment. The loan to value is now 97. Or you subtract 10,000 from it, the loan to value is now 90%, right? Now you take that 10,000 and you put it in second position. So you have a first mortgage for 90,000, you have a second mortgage for 10,000. That 10,000 and that 90,000 creates a combined loan to value of 100%. Even though you have 90 on the first and you have 10 on the second. That's a no-no. If you want to buy a condo, both of them have to be 90. Hopefully that's helpful. So let me get out of the way really quick so we can see what that says. First-time home buyer are required. Being a first-time home buyer is required for the 97% option or 3% down payment. You have to be a first-time. At least one of the borrowers on the application has to be a first-time home buyer. Non-approved condos required, like I said before, 90% LTV, combined loan LTV, and your Section 8 voucher must be converted into a purchase voucher before you can use it. So hopefully that's helpful. Next slide. All right, so here's the lockout period. Chapter 13, bankruptcy, 2-year waiting period for a conventional loan, and requires, if it's an active Chapter 13, then it requires a trustee or judge approval, meaning that you have to reach out to the judge or the court or the trustee and seek their approval. Usually they're going to require 12-month history on paying that Chapter 13. But if that Chapter 13 has been dismissed or it was discharged, it's a 2-year waiting period. Short sales, a 4-year waiting period from the time the short sale is completed. Chapter 7, bankruptcy, 4 years. Foreclosure, 7 years. So if you have any of those life events and you're trying to seek a conventional loan, you're going to be prohibited from being able to get a conventional loan until these year waiting periods have been exhausted. Moving on to FHA, I'm just going to bring all the slides up here. So FHA, let me take me off the screen. Minimum down payment, minimum debt to income ratio actually is 43 to 50 plus. So you're able to actually, if there are compensating factors in the file, such as excellent credit, or you have cash reserve left over, usually 3 to 6 months cash reserve left over after closing, getting an approval over 50% would be a lot easier for you. But again, remember my caution. Remember my caution. You have to make sure that payment is something that you're going to be able to afford. The industry is going to give it to you if you meet the guideline. But should you take it? That's the question that you want to answer for yourself. And probably do some forecasting. What are your financial picture looks like right now? What do you have in place going forward after you take the purchase? Consider the options first, is my caution to you. And you see some of the similar loan limits and terms. Here, FHA, the minimum loan term is 15 years. what I want to point out is that FHA has double mortgage insurance in your payment. A lot of times it's not really an issue, but if you have a debt to income ratio cap that you're trying to be under, for example, if you want to get down payment assistance programs, most of them, we'll talk about that next month, most of them have a maximum of 45% debt to income ratio. In Maryland, there's a provision that allows you to go up to 50 if your credit score is at 680 or above. But again, there's my caution. Ding, 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 ding. You want to pay attention to that. So you have both an upfront mortgage insurance amount, which is 1.75% of the loan amount. And how we get to the loan amount again? You take the purchase price, $100,000. You minus your down payment of, in this case, it's 3.5%. You're left with a loan. That loan, then you multiply it times 1.75%, and that amount is added to the loan, and that's what your payment is based on. Right? There's also a monthly mortgage insurance as well. You take the 0.85%, that's the multiplier, times the loan amount divided by 12. That'll be your monthly mortgage insurance. And similar capital outlay, 2-year history, the same type of income is allowed. Down payment assistance. Now here, FHA allows up to 6%. And in this market, good luck. You may not get that, may not get any. But you can get up to 6. It's allowed. Whereas on a conventional loan, you have to stair step at 3%. And then if you want to get 6, you have to put 10% down, and then it kind of stair steps up from there. Minimum credit score, 580. We will manual underwrite down to 580 on FHA loan. But if we do a loan for you between 500 and 579, we have to have an automated underwriting system approved eligible finding. That's what AUS stands for. Automated underwriting system required. Okay. Correction. We manually underwrite down to 620. We need an AUS from 580 and above, as well as 500 to 579. Student loans. Here's the other multiplier for student loans. If there is no payment on the credit report, then FHA requires 0.5% of the outstanding balance as a monthly payment, regardless of the status. It doesn't matter if it's deferred or in forbearance or whatever the status is. FHA requires a payment. So we got to use what is on the report or 0.5%. And you see the collateral is pretty similar to conventional. And again, the caveat, remember the caveat has to be, the condo has to be FHA approved. So we're going to the next one there. Oh, how you doing? All right, so let's see what we're talking about here. A couple of notes I want to make. All right, so compensating factors that allow you, that makes it more comfortable or palatable for lenders to approve your high debt to income ratio is 1 to 3 monthly reserves, PITI, principal, interest, taxes, and insurance. New PITI is at $100 or 5% higher than the previous rent. 12-month rental history is required, and 1 times 30-day late is the maximum for that. Residual income, that's just a number that is calculated from all of the income in the household and the debts that show up in the household, or the expenses as well. Is there money left over to cover those things? That's what residual income is talking about. And then no discretionary debt, meaning no kind of debt accounts that you don't really need, right? So those we'll cover that next month as well when we talk about down payment assistance, because that's going to come up. Oh, there I go. All right, let's see. Let's move on. All right, let's talk about the lockout period. Chapter 13, 2-year waiting period. Now you have a 1-year waiting period and a 12-month history rating from the trustee if it's active. If it's an active Chapter 13, you can still purchase with an active Chapter 13, providing the trustee who's managing in that can provide us a 12-month payment history where you have missed 0 payments. Short sale, there is no waiting period if current at the time the short sale was has been completed, meaning that you weren't behind at the time, and then you was 0 times 30 12 months prior to that. So at the time of application, you had 0 lates for the preceding 12 months. You don't have to wait to get an FHA loan if you had a short sale. All right. Chapter 7, bankruptcy, 2 years. Foreclosure is 3 years. PA, Mr. Mrs. Veteran, this is for you. Debt to income ratio range 41 and up to 50 with compensating factors. Residual income is required to be 120%. So your expenses at home, the household income, your income after your expenses to purchase the house left over needs to be 120%. That's residual income. It's 100% down. Those are the loan terms there. The thing I wanted to point out, there's a VA funding fee for every first time use of 2.3% of the purchase price. If you are not exempt from that funding fee, Mr. and Mrs. Veteran. If you're not exempt from that, usually some type of disability is required to be exempt from that funding fee. A lot of times there is a percentage. If you're not fully 100%, you don't have a 100% rating, then you would have to pay some portion or all of that upfront fee. Again, that's added to your loan. 100% financing added to your loan. Capital requirements are pretty much the same. Now, there's veterans can enjoy what is called a caregiver stipend, right? There's a caregiver stipend. So if the veteran is purchasing and they're caring for a veteran that has 100% disability and you're caring for them, you're getting paid for that. Those funds can be used as well. AUS is required for credit scores below 579 down to 500. We can manually underwrite down to 580. Here's a student loan. Here's where it differs. Student loan requirement. Number 1, if your student loan, Mr. and Mrs. Veteran, is deferred out 12 months past your purchase closing date, 12 months past that, we don't have to count the payment at all. Or if it's not and you can't get it deferred 12 months past, then we have to use 5% of the outstanding balance divided by 12. And that is the monthly payment. And you see the collateral requirements there. Both builders and condominium associations have to be approved by VA. And there's a website that we go to determine that. Here are the lockout periods. Chapter 13, for you, there's no waiting period if discharged at the time of application for Chapter 13. However, if it's active at the time of application, requires a court approval plus a pay history to the trustee for 12 months where you have made 0 late payments during that time. So one of those you can purchase. No waiting period for short sales either. It's up to the underwriter. And the way the underwriter is going to look at it, they're going to weigh that short sale in light of all of the other credit activity over the last 12 months, including your residual income, your cash reserves left over after closing, whether or not you're coming to the table with the cash or you're getting gifts from family members. All of that speak to stability perception of that particular loan transaction. And so the underwriter will make that decision. Chapter 13, Chapter 7, 2-year waiting period. Foreclosure, also 2-year waiting period. USDA. Oh, yeah, going too fast. USDA, that is 100% financing for everyone who is not a veteran, right? Potentially everyone. There's a caveat to that. Manual underwriting is allowed below 680, but it requires a really strict adherence to the 29-41 housing and debt ratio. So that 29 is the front or the housing ratio, meaning the estimated monthly payment divided into your net, but for our purposes, divided into your gross monthly income, it can't be 29%, or it can't be above 29% for manual underwriting. And you use the same calculation, but you're adding the debt payments to that, and it can't be more than 41%. And then it is 100% financing. Those are loan terms there. There's no max loan amount on a USDA loan. You just have to qualify to be eligible, and the property location has to be eligible as well. And we'll see that in just a second. Upfront funding guarantee is 1% of the loan amount or the purchase price, the same number added to your loan. And then there's a 35%, 0.35% multiplier, like with FHA is 0.85, same thing, 0.35 times the loan amount divided by 12. That's your monthly payment. Here's some of the cash funds. You can get a gift. 100% gift funds are allowed, but cannot be used to meet your cash reserves. So again, yes, you can get gift funds from family members and they can pay all the costs. But if you have your loan requires reserve, not every loan does, but if your scenario does, then the gift can't contribute to it. It's got to be money that you have yourself. Seller assistance that up to 6% is allowed. In VA, it's up to 4%. I didn't mention that before. Now, here's something that you want to pay attention to with regard to USDA. USDA functions, I like to say, kind of like a down payment assistance program in the sense that they will consider all household occupants over the age of 18. They will consider all of their income to see if you qualify for to get the USDA financing, right? Not necessarily the lender's approval. It's not the lender's approval, and we can't approve it if you're not eligible anyway. But we're talking about even being able to go after or start the loan process with a USDA loan. They're going to consider the entire household income. So we're required to plug in the income of everyone who's going to live in your house, age 18 or older, into the USDA system, and they will tell us, yes, this person is income eligible, right? The caveat to that is if the 18-year-old is a full-time student, then we just simply add $480 as their monthly income, and if you're still qualified, then you're in, okay? Credit score goes down to 580. Student loan, 5% of the outstanding balance on the credit report and it has to be documented or documented payment, meaning 5% of the outstanding balance on the credit report, that's the payment that we use. Or if you have a letter from your student loan provider that documents that you're paying a fully amortized fixed monthly payment, meaning it has the full interest in it, has the full principal in it, and it will pay off during a specific amount of time, right? Functions just like your car loan. Car loan has your interest in it. It has the principal in it, and you pay the monthly payment over time. Eventually, you pay more principal than you pay interest, and then you pay that loan off. It's steady every month, doesn't change. If you have a payment like that, we can use that payment. If you don't have a payment like that, if your payment is fluctuating, there's no income driven, none of that kind of exotic opportunity. It's either 5% of the outstanding balance, or you have a documented, fully amortized payment. And here's a caveat here: medical collections not required to be paid in full. That's kind of across the board. And then other collections, you will have to use either if you have a payment arrangement with them, and it's kind of across the board, payment arrangement with that collector, or we have to use 5% of the outstanding balance. Okay. Now, if there were judgments, however, judgments have to be paid off. Tax liens do not have to be paid off, providing you have a payment arrangement with the provider, whether state or federal. You have a documented payment arrangement from them, so they're acknowledging the payment arrangement, and you have made 3 monthly payments in a row: March, April, May, June, July, August. Not 3 monthly payments in 1 month. All right, consecutive monthly payments. And there are location restrictions for all USDA loans. So again, there's a website that we put the address in, and it'll come up. This is a USDA eligible area. Ding, 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 ding. 100% financing for you. The condos, here we go again. Condominiums have to have FHA approval. So here's the lockout periods for them. No waiting period for Chapter 13 if it's discharged. However, if you have an active one, then same thing here. It requires court approval plus a perfect pay history for 12 months preceding the application. Underwriter discretion waiting period, 2 years for bankruptcy, Chapter 7, and 2 years for foreclosure. Outstanding. So now we're going to finish this thing up here. We've been going strong here, almost two hours. Thank you so much for your patience and hanging out with us. We're going to talk about protecting your approval, and then we're going to let you have the rest of your day. Also, here's some do's and don'ts. Now, I know there are a lot of my loan officer colleagues out there who may have experienced this, where they have coached their home buyer through the home buying process, issued a pre-approval, and they kind of give them some wisdoms at the end. Here's what you don't want to do. You don't want to open up any new credit cards. You don't want to buy a car. You want to pay all your bills on time. All right. Don't open up any new accounts. Don't apply for any type of credit. That inquiry could show up later on and cause an issue. Now, here's the worst case scenario. You buy a car. If that payment doesn't fit the new debt to income ratio, your loan is dead. If it does fit and they find out at the end, you're going to need to get an extension, because if it happens right before closing, because credit reports are pulled right before closing. If you don't know that, it is done. Just about I don't know any lender that doesn't do it. It's a requirement that we pull the credit right before closing. It's usually done 24 to 48 hours before closing. Why do we do that? It's a soft pull. First of all, it doesn't affect the score, but we do that because we want to make sure, and we have a responsibility to make sure that we have confirmed your ability to repay that loan. And so all debts have to be considered. So if there's a payment that shows up afterwards, or there's an inquiry that shows up after your loan was submitted, you're going to have to confirm whether or not that inquiry resulted into a new payment and provide documentation of the payment, so that the underwriter will be able to consider that and give that stamp, or they're going to give an adverse action letter, say, I'm sorry, this action caused your loan to be denied. All right. Inquiries, same thing. If it did not result in a new debt, you document that, you send that in, and then your loan continues. So protect your pre-approval. Don't change jobs after you have received your conditional approval. Very important. Now, if that's part of your plan and you have that conversation with your loan professional prior to them submitting the loan, then they can help you set up your loan so that you can take advantage of that new employment during the loan process. But we need to know about it up front. We're going to need a job offer letter, and you're going to need to get a paycheck from that job and some lenders will require a 30 days worth of pay stub to be able to use that income. Some lenders won't even use the income. They'll use the old income, but because you have the new job, they'll still approve the loan because you are employed, but they'll use the previous income that may have been lower. You just want to be careful. We just don't know what overlay which lender has. So the best case is have that conversation up front. Don't leave anything out when you talk to your loan professional, because you put them in a situation that they're not able to help you to the best of their ability if they don't know. Okay? So hopefully that's helpful. All right. So here's a couple things that we want to we cover that before. Your loan officer will submit your loan to underwriting to ensure a timely and smooth process. Your loan officer will make the underwriter make it easy for the underwriter to understand. Here are some reasons for denial. That's a biggie. That's a big one right now. I hear that. I get calls all the time because the loan has been denied. It's because something got missed, or something wasn't communicated throughout the process, or something wasn't discovered. So it's really that initial consultation leading up to you getting pre-approved is so important. It needs to be very detailed so that everything that occurs after that point occurs according to the loan transaction. So screenshot that. You can read that for later. And let's listen to this.
You've applied for a new home loan and have been approved. It's an exciting and critical time. Minor changes in your financial status can tip the waves of approval in the wrong direction. Make sure the tide of your loan process is smooth and follow these do's and don'ts. Don't apply for new credit or give your personal information to anyone else who might run your credit report. Credit inquiries may hurt your score. Do wait to buy a new car, boat, or appliance until after your loan has funded. Don't make career moves. Your mortgage lender must verify your employment, so it's crucial to maintain your employment status. Do keep copies of important financial documents. Check stubs, W-2s, tax returns, bank and investment account statements, rental agreements, etc. If asked to provide any of this information, you'll be ready. Don't make large deposits into your bank account unless 100% necessary. If you must, then save the documentation which shows where the funds came from. Do complete all necessary documentation if you'll be receiving and using a gift as a down payment. Have the donor provide the funds as soon as possible. And don't forget to say thank you. Don't keep cash in a safe or an overseas account if you plan to use these funds as a down payment. Inquire about how and when would be the best time to put funds into your U.S. bank account if needed. Do look for homeowners insurance. Provide the name and phone number of your homeowner's insurance agent to your escrow officer. Experience smooth sailing when getting your home loan funded.
Outstanding. So here on your screen right now is the typical home buying process. So you go through, you can see the steps there: pre-qualification or pre-approval, meet with your agent, apply for the loan, negotiation of your purchase price. Now, applying for the loan and pre-qualification, that's usually the same process. Now, applying for the loan is the more formal process of it being submitted into underwriting. Once you have negotiated that purchase price and you have received a ratified contract, seller sign, you sign, it's official, you submit it into your lender. You give that earnest money deposit. You open escrow is what is also typically closed, typically called. You'll get you get your loan documents initially within 3 days of that official application. Your loan documents that will include your loan estimate and that kind of thing, and other disclosures that speak to your rights. It has initial pricing and hopefully interest rate lock at that time. You should want to lock it at the time because this market, we're in a volatile market. You don't want to play the float game right now. You want to go ahead and lock it in. You got the rate, get it. Because it's not promised even after you hang up the phone. It could increase. And then right before the process is concluded, you get your closing disclosure during that time, final approval, underwriting, and some of these steps, it goes from the bottom up. I'm actually reading from the top down, actually. So you go from left column, top down, middle column, bottom up, right column, top down. So you have that there. Outstanding. So that's my time today. I want to say thank you so much for hanging out with me today in this episode of From Dream to Reality Live, where we've been discussing destination home ownership. What's first things first? And through this process, you're going to be determining your path to home ownership. And this is just the list is longer than I have room on the screen. And so in addition to the items that are listed here, you heard today that there's a 50% discount on all of your home inspection needs. Once you receive this Home Buying Readiness Pack and you get that coupon, you can present that to Mr. Al Durant and his team. There's a utility concierge service that you'll get through Silver Glover and her Goosehead Homeowners Insurance team. If you use one of our real estate agents, you're going to be getting a home warranty and discount title fees and things like that. And so we want to make sure that you are empowered and you have the tools necessary for you to have an awesome and amazing home buying experience. And so that's my time for today. Thank you so much for hanging out with us. You can reach me at 443-569-6079, 443-569-6079. My email address is Shawn, SHAWN, .Wilson @nafinc.com. NAFINC.com. It's the abbreviation for New American Funding Incorporated, NAFINC.com. And you enjoy the balance of your day. Bye-bye.